Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market continued to balance within Friday's range, and most of the overnight session was spent in a fairly narrow range, balancing on light volume. At this point, heading into the open, the larger time frame bias continues to be bullish, and in the short run, as long as ES can hold above 60 to 62 off the open, that would be a bullish signal confirming that the buy side is still in firm control, and that could lead to an upside move. Now we do have some resistance up here at 68.5 to 70 near that previous VPOC, and then 71.5 to 73.5. So in order to get a breakout above the initial resistance zone, we are going to want to see some sustained upside momentum in the market. And as long as we can get that, and we're getting at least some level of participation from the other markets, especially TF, which has been relatively weak. So as long as TF isn't selling off and at least maintaining some strength, and ideally starts actually participating on the upside, then there is potential for an upside move into the 77.75 to 79.75 resistance area. So even though we have these short-term resistance zones nearby at 68.5 to 70 and 71.5, 73.5, as long as there is upside momentum, we have to understand that that larger time frame bias can come into play, and we can get that upside move into 77.75 to 79.75. Now, if the volume stays relatively light, then that would limit the range potential of the day. So that means that if we are holding above 60, 62 and then start heading up, and we actually even put in a breakout, the upside could be limited to 77.75 to 79.75 or the 83 quarter to 85 quarter zone, simply due to a lack of volume to really press it much more than that. So as ES is testing those upper resistance zones, if the volume is fairly light, or if it's not really above average, then it's probably a good idea to take profit on longs. And depending on how that zone gets approached, it may even set up a quick short setup where, as long as you're getting in a good location and only risking 2 or 2.5 points, you can probably get a quick 4 or 5 points out of it. The 83 quarter to 85 quarter zone is more likely to provide that, but depending on how we get to that 77.75 to 79.75, that may still be a play over there as well. But the 83 quarter to 85 quarter zone is more likely to provide a better rotation in the event that ES breaks out above Friday's range. On the downside, we have Friday's low at 56.75, and a break below that would bring that open gap into play at 53, and the initial support zone at 52 to 54. That's still an area where responsive buyers can be active. Given the larger time frame bullish bias, at this point, first test of any support zone below can attract responsive buyers. So even if we break Friday's low, it doesn't necessarily mean that the market is liquidating, or it doesn't really affect the overall bias of the market, which is going to continue to be bullish. So even if the market starts heading lower, 52 to 54 can still be a good long setup, especially towards the bottom of the zone at the 53 gap and near 52. And then even if that zone doesn't hold, the 47.75 to 49.75 and the 42.75 to 44.75 zones are still going to be good spots to initiate longs and look for a move back into Friday's range and back into the current overnight range. So that larger time frame bullish bias is going to continue to be in play, even if we don't head higher and actually break below the overnight low and below Friday's low. It can just be a failed breakdown attempt, and then the market turns back around. So the only time that it would make sense to be cautious or very careful on the long side is if it's very clearly a reversal or a trend down type day, where it's not just a minor pullback, but a strong sell-off on broad market weakness with a very negative and extreme AD reading on the downside, and clearly sustained downside momentum. So we'd have to see a lot of signs on the downside in order to adjust our bias. Until then, it's going to remain quite bullish, and we will look for either an upside continuation move, or if the market pulls back, we'll still look for the market to balance and return back into Friday's range and back into the overnight range. So given the overall bias, we are going to continue to focus more on long setups and continue to be conservative and cautious on the short side. It doesn't mean that a short can't set up in real time, depending on the strength or weakness we're observing in real time, but we're just going to have to see more signs to initiate a short, and even then we're going to want to do it at decent trade location. So we're going to avoid any aggressive short setups at aggressive prices like Friday's low or even the overnight low. Those are aggressive areas to initiate shorts because the market can reverse off the initial support zone, which is very close to it. So we have to be conservative on the short side. We'll continue to be more active on long setups as long as this uptrend remains intact. And then the primary upside target is 71.5 to 73.5. But as long as we have some momentum behind the upside move, we can go up and tax 77.75 to 79.75. The extended target would be 83.25 to 85.25. And if the volume remains light, we may not get there. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control, and we'll take it from there.